Hello, hello, good morning. Welcome to another ES Futures Trading stream. This is Victor. Today is Friday, November 10th, 11:10. It is 9:18 Eastern Time in the US. All right, let's go to what's happening in the market. We were talking all this week, the past week, how weak the rally was, how bad the structure of this rally was, and how momentum can take markets to extremes. And even though the structure is bad, really bad in the lower side, it doesn't mean that it's going to break, right? Sometimes traders will lose a lot of money trying to upfront the movement. And this happens all the time, right? Also, another thing that happens is, I don't know how to say this. Let me highlight this. When we have this kind of market, this break was really, really bad. Okay, the whole market, all this this incredible rally the market had here. We went like 30%, something, 15%. It was a really big rally here, but it was really bad. Okay, and the next thing the market does is this. I'm not talking about this. Maybe it was this. Don't remember. Yeah, all this thing was bad here, but the correction doesn't happen right away. Right? This is bad here. Structurally, this is super bad, for example. Right? But the correction doesn't happen right away. You never know when it's going to happen. But there are some signs, right, that the movement is in the later stages, in the laggard stage. One of those things is when the market starts doing. Can you see how this part is? Right? Can you see how all these lows line up? Line at the bottom. You can place a trend line here, and it's going to fit perfect. That's one indication that that usually happens when the market is too elongated or when the movement is in the final stages. And that a reversal can be close. In this market here, what we have after we have this movement, this really bad movement, we have extraordinary short. This is a short squeeze here. Notice the gaps. In just 3 days we have 1, 2, 3 gaps here. It took the market here, for example. We got 1, 2. Can you see how many months we had before the market had 3 or 4 gaps? It just took 3 days here. This is an incredibly risk. I mean, the long has a really incredibly high risk. It doesn't mean it's going to break, right? It doesn't mean it's going to break right away. But this formation here, we were talking about this formation here, 1, 2, 3, 4. Just you could place. I guess I did something. Yeah. This is the current contract, right? This is the current contract. We have 8 minutes to the opening. We could place this line. We will, and the way how this market was trading, very. The odds that the dominant force are short time frame traders are high. So I put this line here at the top. I put this one here because if I if you can sense, you can feel that there's no serious capital involved, serious buying or serious selling, you can expect some kind of behavior here. One of the things that we were talking past days, well, there could be maybe a potential buying here or potential selling here. None of these things happen, right? But we were also aware of this trend, like these kind of formations at the late stage of a movement. In this case, we have a virulent short call, virulent short squeeze to the upside here, short squeeze here, and this was one scenario. Right? This was one scenario. This was getting too risky here, just too much. I'm not claiming that I knew what was going to happen. What I'm saying is the risk of being long in this market was extraordinarily high, incredibly high. This was an asymmetric opportunity here, but you can risk, right? You can risk really low. You can maybe be short in this area, somewhere in here, and there is a really short distance for the market to let you know that you're wrong, because this would be the stop, and the potential is high. The potential to the downside is high. This is in the daily time frame. Okay, this is the daily time frame. Now, the monthly, I am keeping an eye on this level, the 44.23, which is the high of the previous month, because if the market takes this level out, that is the end of one time frame lower here. We have a trend to the downside in the bigger time frame. Taking this one is the end. There is no more downside trend. The bigger time frame, the monthly, is always the last one that will show change. The daily is the first one. No, there's change here. One time framing has ended here. There's no more. We have a really, really weak level here. This level here, this upside, this 44.23, that happens to be also a reference, not just in the monthly, but also in the weekly, no excess in the weekly, and in the daily as well. And as we see next, is also intraday reference as well. But the difference relative to other times when we had this when the market was in sync, for example, was going to get in sync really close to a reference that is common for all time frames, the odds of continuation of the movement in the direction of the reference are high. Now the context is different. We have a really bad market here. This is end of the year as well. Earnings have earnings season is pretty much over. The big tech has a part, but we still have more. We have consumer and other things that still have to come. But the ones that tend to move the market are we are passed through those ones. So that part of the cycle is over. Now we have these. What the market will do with these gaps here on the lower side, because the upper side, notice how we have a range now, 1, 2, 3, 4, the range. We have a gap on the upper side, gap on the lower side. Really, there's nothing in the upper side that can prevent or can hold the market, can offer any kind of resistance if the market goes to the upside. The same thing goes to the downside. The downside is even worse than that, right? Checking another markets. I was checking the crude oil here. Another market. This market is going to open in range. The daily. What's happening with the daily? You have crude oil here. This is looks like long liquidation here. You have a nice range here. This range is compacting here, right? This is an inside bar. We have another inside bar. The resolution. This is a balance inside balance. The resolution on this kind of balances usually is kind of like very dynamic here. It could be to the upside, or it could be to the downside. Which one is going to be? I don't know. Nobody knows this. But this is something that markets is starting to focus in. Bond markets are, again in range here, kind of far from the lows now. Not that far, but leaving the lows. And it would have been nicer if there was no gap here. Now we have this range, and this level here, you can see this is very technical trading as well. for the market, when we have this kind of structure in this market, usually there is some catalytic here that takes the market down or up, depending on what the context is. In this case, was Chairman Powell yesterday. 2 p.m. we have the action. Also the Treasury. I don't know. Something happened there. I don't follow that much, but I just have highlights. But mostly some comment that Chairman Powell did yesterday, which just triggered the liquidation here. Right? This liquidation here, just as soon as the market was doing this thing here again around the 4,400, as he said something that there is potential for more hikes, the market just boom come all the way down to here. I believe to the what is now the 50. There was a lot of back and forth here, and it took all this inventory out. Now the market got 2 distributions here. We got 20 seconds to the opening, and closing this distribution. Okay, it's a rejection of this movement. But then the downside, the low part of this range, the low is really weak. It's even worse now than how it was before, because this is weak and also poor because it has no excess. Opening inside trading, opening inside previous day range is advertised shopping, advertised shop. The odds of rotation are high. Of course, I don't have charts now. Saddle is down here. If I check my, okay, this yesterday took all this range out. We have balance here, today's balance here, value is moving higher, but notice this, okay? Notice this. Even though we have a big day to the downside, value is overlapping to the previous day, to this range, and even to this 2-day balance here. Okay, I am as neutral as I can be here. I don't have a trade. If the market close or open below this distribution here, that would mean that could be, I may have something in the lower side, some kind of that is market generated information telling me, okay, there's more to the downside. The potential, the risk in the lower side is still, the risk in the long side is very high. The potential to the downside is still there. Right? Notice how the action to the downside has not been completed here. The upper side is extremely risky as well. Very, very, very risky to be long in this market. Okay. Yesterday, I just, I take a decision. Right? I make up my mind early in the session. This is the last thing I want to be in this market is long. I'm not going to be long. All right. I wasn't going to be long. Of course, as soon as you say something like that, you find yourself in the same in getting long. Now, notice what is happening here. Traders do what works and things doesn't work anymore. But pay attention to market generated information. Okay, market opened yesterday, and I didn't care about exploring. It did some exploration above previous day high, and just rejected the movement and started trading lower. Now we have the same opening. Okay, the opening, we're going lower, right? We're going lower. Overnight inventory is fairly balanced. We have settled here, kind of like a good amount of trading in the lower side. Good amount on the upper side. Notice where this distribution is. We have 2 distributions on the overnight, okay? The market has not closed this distribution, and it's the same level here. This is a very weak level, though. I have to say. How much volume? We have 300K. That's a good volume here in the overnight. it was decreasing. All right, I want to see if this market closes these distribution fields. That's okay. The overnight. Closing these distributions risk, risk the longs here. Put more pressure on the short side. Oh boy, look at this, man. Look at this. I didn't see this. This rally here took care of all the short inventory here. But this, I think, it's pretty balanced here. Maybe a little bit was starting to get long, but from yesterday, inventory is short. Inventory is short. Now we have this area in the lower side, huh? We have 2 nodes of volume. And why I'm checking this? Because that's what I observe. It's by observation. No? Sometimes it pays attention, and sometimes it doesn't. And when I notice this kind of behavior, dominant, where the short time frame is dominating, is the dominant trade, usually it tends to be attracted to these nodes. Bigger capital, bigger time frame participants don't care about this. I have to be short, I have to sell, 2 billions, 2 millions of actions or whatever. I just start saying, I don't care about these things. Same things in the opposite side, right? If I'm going to buy 1 million actions or Apple or whatever, where is it 200? I don't care. Where is the 50? I don't care. They just sell, right? Yesterday, the upper side didn't have taper. Notice how here the volume doesn't decrease here. It just open and start going lower, right? Mimicking what happened yesterday. The same thing is happening today. It open. The difference is yesterday we have all this inventory here, all this long inventory here in the market that can fuel the sell, the break here, the liquidation. Now or at least this is not here anymore. What we have is this unbelievable, rally below. There's a vacuum here on the lower side. This break was fueled by news. Now, the next thing I watch, what's volume? Where is volume here? Let me put my volume up here. Because volume was a little bit higher yesterday, but it's still very low relative. This day could be considered normal if I say something or this one, but this is very low relative to this one. Okay? Now, is the movement going to have momentum, going to gain momentum? If momentum joins, the liquidation can start. I have this here. We were having some hints, right? Some hints. This day, weak opening. This day has a strong closing. Weak opening, weak closing again, and then resolution this day. I am still, okay, I think, there is a current, there is a sector that think, right? The market is not going to come back all the way up to here just to retrace from this high. It's just too close, right? That's some traders think that way. This is just too close. I don't think the market is going to liquidate, leaving this exponentially weak level untouched. And we don't have nothing here. There's a gap. There's nothing here. This day I don't have it here. Why I don't have it? Because I guess I don't care. Now the main thing, one of the main observations that I had here, or my primary focus of the opening was, for today's opening, was where the market opens relative to this distribution here. Okay, the market has closed this distribution. At close yesterday, I believe we had another distribution as well. Did we? Yeah, did here. The market closed that one, but it did not close this one. Okay. After this reaction here, the market settled, left. The trade was, if you don't have this trade here, this was hard. You can have this one, somewhere in here. The main thing about this is location. Okay? But this is the laggard part of this trade. The location is forming the distribution. As soon as the market closes the distribution, that's an out. Maybe 1 or 2 ticks, and that's it. I would never go short here, for example, or here. Because the risk of the market taking this high is really high now. UK would have taken this one. This is a short by the book, all right? Sometimes you will find this one. And when you find something that is so, sometimes to the T, right? If the market do this, you do that. If I find myself, doing something like that, that's a market that is easy to read. And when the easier the market is to read, the odds that the dominant force are, the dominant traders, or the traders that are in control of the market, are the shortest time frame traders of all, is high. Right? When we have bigger time frame, we actually don't know. Right? We don't know. The easier the market is to read, the higher the odds. The dominant force is short time frame traders. No? Notice where this market opened here. Did you see this opening? Where it is? What else do we have here? At this level, exactly this level. What else do we have? Again, buy the book, right? What else do we have? Half back. Yesterday's half. Market is opening at the center. The closer the market opens to the center, the higher the odds of rotation. The higher the odds of rotation, the higher the odds of chop as well. Try to remember what happened. They're trying to do what happened yesterday. The context is different today. Right? The context is different. The market could have been down here right now, right? But I would say, I would have said, I wish I would take that trade. But that's not how I do the things, right? When I talk about the odds, those are odds, right? It doesn't mean that it's going to be like that. Those are just odds. Just odds are high that we are going to have chop, or this is going to be highly chopping. We're going to have a lot of chop here and rotation. But those ones are just odds. We have to put things in context. All right. At 10 a.m. today we have consumer sentiment. That usually is not a big thing. consumer sentiment at 10 a.m. But you had this was catalytic yesterday. But the context, right? What is happening right now? This market is so could be so easily moved in one direction or the other. These things can become relevant, they can bring some volatility. Let me check how much the VIX is today. VIX for no way. VIX is even lower now. It's 14. God, less than 15. The risk is still high here. Now I was talking about the risk. The lower side is still high. I think higher than yesterday. But this gives traders a false sense of I don't know how to say this, confidence. Well, another trade, right? Another typical trade, another short-time trade is, the market take this low by one tick, and that's the trade. This is also, you need to know. I didn't take this trade, but that's how traders work, right? Either failing to close this or take it by one, okay? And then you have rejection, and the trade here is this side actually, because this is a distribution here in the lower side. Now it's exploding above, which targets actually the opposite side. Now, context again. Value is overlapping. Okay, value closed, didn't close. Again, most important of how it closed is what didn't do yesterday. We didn't have higher value. We didn't have lower value. We have overlapping value. Even though we have this big range here, this is unchanged relative to yesterday and to the day before, and even to the last 4 days. It's unchanged. The risk, everything remains the same. Everything, at least that's what I think. Remember, this is just personal opinions, right? You have to do your homework as well. You do your homework, do your observations. Sometimes you will be wrong, sometimes you will be right. When you are right, it's lucky. When you are wrong, okay, you have to work on that. But you do you, right? What I'm trying to do here, this is a way for me to keep focus. I started these streams as a way to help myself to remain focused in the market. Yeah, but that changed with time, right? There was a time when there was a distraction, and now, after that, I realized this was it was a good way to be, to have some accountability here. Just to put your opinions out there. And now something that I realize is, if I do what I say, because sometimes I've noticed that, I have this market generated information. I have to do this, and I end up doing the opposite thing that I was saying, and I'm just asking myself why I do that. This helped me. This has helped me to know myself. I realize I am one of those persons, one of those people that have this mindset that if I am told to not to do this thing or that thing, I actually do quite the opposite, right? I double down. Somebody tell me, don't do this, I end up doing that. It's a way to know me. So instead of speaking to myself that way, I start to change. Right? This is part of my journey. Right? Knowing yourself is very important. At the end, this business is about us. Believe it or not, this is about us. This is about every single person mindset. This is not we against the market. This is not we against hedge funds. Uh, it's a personal, very personal journey. And the more you know yourself, the better the odds of success here. Sometimes, there is just some people that have it. Their mindset is or it was built in a way that is the right way for this business. Most the rest of the people, we are not like that. We have to work a lot on that, because these talented people, gifted people, there are just a few. You can see that in any other field as well, any other business. You have football, soccer, baseball. There are very talented people that have the gift. The rest have to work really hard. So instead of telling myself, don't do this, now I say, do that. All right? I try to avoid that part. I say, don't do this. I shouldn't do this. And I must do this. I also had the tendency to see, to look for danger. That's part of my brain. That's part of my wiring. And that's why this is very important. That's why I don't call trades, because we all are different. We all are different. We might see the same market, we might see the same information here, but the way how we process that information is different. That's a very personal discovery that we have to do. The sooner we do that, the better the odds we have to be successful here. And it takes time. It's a long journey. I was talking here. I have no intention to play to place any kind of trade here. I didn't do anything here. Just let the market settle here. I guess I still have a bias to the downside. I am checking. Let me check the other markets. Something I also realize is when the market, put me to sleep. God damn it. Market puts me to sleep. Suddenly I fall asleep. I find myself taking a nap. Okay, that's a sign. Something, I want to stick to my the trading desk. Also, yesterday, the last couple of days, I was very anxious. I was and realized, that was because I saw tremendous weakness in this market. I was kind of like. Even though I was verbalizing not to be, not to try to upfront the market. Again, I find myself talking in the same way, right? Don't do that, right? Do not upfront the market. I just had to leave, man. I just, I guess one way to relax or to forget or to free my mind or to release my, that thing is I just leave, get out, take a walk the dog, something, but do something that anything that is completely unrelated to trade. And if you miss a trade when you are out, you miss it, right? But it does not. The market will give us another opportunity always. But the right state of mind is very important as well. Today is Friday. Okay. Something that I also usually pay attention on Fridays is end of the week, right? It's end of the week. What can happen if you see the market, right? If you see the market, oh, market is going higher, going higher, going higher. This market is never going to go down. Okay. One of the things that can happen here is, and this is something common as well, you will find traders selling naked puts here. You know, the market is going high, high. Easy money, right? Easy money. The market is not ever going to come back down to here or down to here. That's impossible. And those, that kind of trading or that kind of activity is also what fuels this kind of, this kind of movement we have yesterday. Those naked call, naked option sellers were crushed yesterday. Oh, they were just, killed. And the thing about that is, you start doing that, right? You do it here, or maybe here, okay, here. It is true what Jim says, right? You make peanuts. You gain pennies a lot of times. The percentage of winning on that trade is high, it's really high. You win 80, 90, 95% of times. But you win little, right? You win little. But when you lose, boy, you will lose. You can lose really. Really. You can have really high losses there. This market is very, when the dominant force in the market is, or are short time frame traders, which I think is the case now, it is easy for the market to go in any direction, because inventory is short or long isn't what we call weak hands. Short-term frame traders are not there for a long time. If the market is going against them, it's going to go against your position. You are not going to stay there, not going to stay there. You're just going to liquidate. Or to cover, or whatever, right? Now we have a range. Look at this range. This 5-day range here. 1, 2, 3, 4, 5. Where the market is right now. Right at the center of that range. Adding value. Let me show you something here. I'm going to do something here. I'm going to join these 3 or these 5 days here. Come on. Okay. Like that. What? Oh, okay. I guess this is. I cannot see this. Let me do something else. Let me do it here. I'm going to join this. I wish this, when I join these profiles, I wish it was just a day session, but it includes the overnight. But that's something I don't like. Here, for example, you can see these TPOs here should be, you have 4 here, 2 here, around 8 wide here. When I join. Two, 4, 6, way more than 8 here. Huh. But did you see here this balance? Here, you got POC up here, but this area here is this one is about the same as this here. This is a nice balance. And look at what do we have in the upper side? We don't have excess here. We don't have excess down here. Both sides are quite weak here. Yeah. That's why I try to remain as neutral as possible. Um, just let the market show its hand. The last, if I remember well, the past uh, Fridays, the last Friday and the Friday before was kind of like a very, we had trade that happened, kind of like at the opening or the first periods. We have something there, some opportunity. I don't remember. I guess that's why if I don't remember, if I remember well, right? Yeah, I remember right. That's not happening today. Today is kind of different. That's one thing. We may have something, maybe later today, and the markets most of the days are rotational, and usually market gave us 2 or 3 opportunities a day. There's no more than that. If you were, I didn't take I don't know. This was a good opportunity here yesterday. The next one after this, I guess we were checking that the market may come to this area. Yesterday, not consumer sentiment, 10 a.m. Huh? This was the another opportunity, right? You have two, one here, two here. Other than those two, nothing. One of the most important things we have to learn is, once you see something or once you think you see something, the next thing is we need to find location. You got a break here. We got a break here. But I am going to be short here. Come on. So what will happen if the market has a pullback all the way up to here? The shorts is still there, right? But we don't have a location. Whereas why short at this level or 1 tick or 2 ticks below this level, this is the location. This is my location to get out. This is the market. If the market comes back and takes this low, it would be the market re-entering this range, right? With the potential to travel or to go to the opposite side, because the context, but we have everything out there. And that's location. Right? I don't see an opportunity here. Actually, I think this high is weak here. Notice where this market was sold here. It's not hard back here, but it's still, right? You got hard back from the previous day. It could be coincidence. This could be coincidence. This can be coincidence. Now there is selling here. There is selling here, but they are just trying to repeat what happened yesterday. I don't see anything here yet. Many times when I didn't realize I was biased when I saw the market there's tremendous amount of weakness. I don't like this low for something, right? So I came to the market with a mindset, with a fixed mindset, just thinking myself, okay, I want to be short. I need to find a way to be short in this market. And when I started thinking like that, I actually made up my mind. I closed my mind to another scenarios. because I am so fixated in looking for a pullback or looking for location for a trade, not something like that, that I don't see why miss the main thing, the most important thing, which is observing the market, watching the market, watch what the market is doing. You know? Because sometimes, you know, what becomes relevant actually is what the market don't do, what markets don't do. If I am expecting something and that something doesn't happen, sometimes that's very relevant. Sometimes that's the opportunity actually. But I was so focused on one thing that I didn't pay attention to that. Or I missed that piece of information. Or I missed that thing. One of those things here can be this level. Okay, what happened in the market? The market doesn't take this high. The market is just so close to this high. What happened in the market doesn't take this high? For example, in the monthly time frame, or it comes really close to taking, and it just fails to do that. Consumer sentiment is lower. I don't pay attention to this, right? I try not to see, or if you see this thing, just if it influences your trading, you got to be aware of that. You have to acknowledge that as well. I have a pop-up window from Finance and Juice that you know, that gives me this also. If I got a pop-up window that can tell me, you know, what can, if there's a movement, what can find a reason, you know, a justification for the movement, which is also not that good. I didn't have that yesterday when Chairman Powell. Oh no, I did have yesterday that when Chairman Powell was started the speech. We got something from Finance and Juice from my pop-up window. Okay, what is happening? There was something. Even though I was aware that Chairman Powell was going to speak at 1:50 p.m., 1:55. I completely forgot about that. And what happened yesterday is, you know, I was here. God damn it, this market again is trading around the back and forth on 4,400. I didn't want to be short. I didn't want to be long. I mean, I started thinking, how do I get short in this market? And when I was thinking, the market just came down to here. I mean, you just miss the trade, right? And when you miss the trade, don't chase the trade. Chasing is, you know, can lead to huge losses as well. You just miss the trade. There will be more opportunities down the road, sometimes the same day. Now, what I am watching here, for example, in this day, today, is the fact that the market, you know, this is one piece of information, right? No excess here. No excess in the upper side. You know, the risk here is high. Stops here on these 3 days here, stops here, and stops here as well. And on both sides. A weak, super weekend. But you know, if I keep zooming in, the first thing I see is that these distributions have been closed, which targets the opposite side of this distribution. What happens if I don't have continuation here? The market opened here. Right now, we are in the 7th period mark of the 2nd period, and this is an inside bar. It's not a good. I would like, for example, for an inside bar to be more relevant for me at least. You know, the previous bar to be wider, to have bigger range, and the smaller the range or the inside bar, the better. But this period is just starting, right? The market closed this distribution from yesterday. I want to see upside continuation. What is upside continuation? The market taking this high. What's the next thing? What the heck do I have this 43.91 here? I don't know. I guess it's not. Oh, this one here. The market took half back out, took the opening out. The next thing in the upper side is POC. This is technical trading. Right? Now, is this one time frame higher or one time frame lower? Has not been established yet. This could go higher or this can go lower. You can say this is a market going to the upside. You can say this market is going to the downside. There is some rebalancing here from yesterday. Closing the overnight distributions here targets the opposite. We don't have a prominent POC. This is a rebalancing of this short inventory here. Fairly balanced overnight. So the next thing would be, for example, could be in the lower side, could be overnight hard back, then the 200 moving average right here, which happens to be last, which happens to be also overnight POC. The next thing for downside continuation, settle, which is a more relevant reference. Almost all traders have these on their charts. Settle. This low, this poor low here. This is poor and weak. It's poor because it doesn't have excess. The action has not been completed. Look at the upper side, for example. Here we have 2 ticks on the upper side. 1, 2, 3 ticks. Technically, this is a good high relative to the previous day. To the intraday, it's also good. I will have excess. We have 5, 6 ticks of excess on the upper side. We don't have excess here. And the action to the downside has not been completed. And it's also weak, very mechanical, because it was bought from this, from 11th, 3rd low here. We all have different mindsets. We all have different goals, different ways of trading. I am not a scalper. I try not to be a scalper. I use 30 minutes bars. My periods are 30 minutes. I don't have any chart that is 5 minutes, for example, much less 1 minute. These are 30 minutes when I check the intraday of the other markets, crude oil, dollar, gold, bonds, volume, also 30 minutes periods. Sometimes I got to monitor, I have this to monitor, earnings, for example, what the market does. Some what is big tech companies. The market is being moved, is being held by these 4 or 8 companies here. Now, if you remove this from the Nasdaq or from the especially from the Nasdaq, the market is really bad. There's a lot in this. There's a lot of money, capital allocated in these companies, especially Apple. Then I have, when I want to check, I should check this more often, but I don't. I have here the ES, Nasdaq, the Dow, and the Russell. Notice how different the Russell is from these three. You know, this is small cap companies here. I think this is Russell 2000. What's that? Yeah, the Russell 2000. Really, they're completely different than these ones. The Nasdaq isn't even worse shape than the S&P here. Look at where this market has a stop here. There's tremendous potential here for firecracker effect down here. Now the thing is, it didn't do that. You know, what the relevance of what is expected to happen doesn't happen here. This is the Dow. Yeah, these markets are really bad here. Sometimes when I trade, what I'm checking now also, I'm checking the SPY. And the same, I got the ES here, for example, right? I was checking this level here. What, no? The ES I have whatever number I have here. I check this one here. What do I have here? 41.31, something like that. All right, this high is 40.30.92. Because I was expecting something here. And what I have here, there are some puts here, but these are next week, next Friday puts here, and this is 2 weeks ahead. You know, 1 other week more. This is I believe this is the 17th, isn't it? Yeah, this is the 17th, and this is also weekly. This is the 24th. Is the 24th the end of the month as well? No, it's not. Is this the end of the month, Black Friday? Is it? Is the market positioning for a Black Friday? For a Black Friday? No way. Okay, you have to start thinking. You know, this is, you know, we have to use a lot of imagination here as well. Right now, for example, this is 40.30. Yesterday, the market came down to very close to 40.33. You know, very close to this level. This I guess this went all the way to 4 or 5. I don't remember that well. How high this went yesterday? Let's check. No, I was wrong. No, it's 275. Why is it 5? Maybe this one? What about this? No, 2 as well. Now look at the low, man. Look at the low. 17 minutes mark. Okay, we're past the 14-minute mark. We didn't have directional. Market doesn't have direction. Not to the upside, not to the downside. At this moment in time, the market should have having some kind of continuation either to the upside or the downside, but there's no directional move here. Well, at least not right now. And notice this, okay? This low, boy, this low is super weak now. The lowest. I don't want to be. If the market has a sudden rally, I don't want to be part of that. I'm not going to be part of that. Poor, for example. This is poor. 1110 low. We had 9 out of 9 weak. Lows that were weak or poor. 1, 2, 3 have been removed. You know. So we have 6 now. Yeah, 6. No, 7. Because this was poor, this is also poor now. 7, and now we have again 8 lows. The day is not over, right? Value is overlapping to lower here. It's starting to move lower. You can see how slow it is moving lower. It's in the lower side here, but it's still inside this. But I don't like the outlook from the lower, the long. For example, if I take a long here, you know, what's the location of my trade? And how I will know that I am right, or more important, how I will know that I am wrong. This didn't have continuation here, for example. It's not having continuation because the next thing to monitor in the lower side was overnight hard back. It didn't trade towards this, it didn't take this low. We still have 10 more minutes to go. Volume is lower again. You know, we're back in the tendency, maybe as low as yesterday. If this remains, then the day will close down here. Very low volume, very low volume here, very low volume here. You know, I guess I will. What I can do is take some puts here with kind of like a couple of weeks, maybe 1 week. And the thing with options is you have more room there. You have more room. The market can come all the way up to here, for example, right? Up to here. And when I will know that I'm wrong? If the market takes this high, okay, that's a warning sign. It gets too close to this high. All right, okay, that's not working. You know, the odds that the market has a big spike here to the upside increases the closer the market gets to this high. I might put, you know, my put is not working. The good also is not going to work. I know the low is weak, all the structure of the below is the structure of the market is really bad, but it doesn't mean it will break, right? This is why I try to use odds, right? Alright, it is 10:22. Unless there's any questions there. Andre Building, Nasdaq please. Ninja Trader. Hey Andre. I only do ES. I don't trade the Nasdaq. That's not my market. If I check one of those, I wouldn't know. I use the same principles, right? Let's see if I can put something here. Let me open. Let me open one chart here. Nasdaq. I don't even have it here. Okay, let me call this, select an instrument. This is not NinjaTrader, this is Window Trader. This is just a charting platform. It's not a trading platform. I use Rhythmic for my trades. This is what I use. As you see, I don't. It's very simplistic here, as simple as possible. I usually don't. I usually just go market most of the times. I don't trade the Nasdaq because I think it's too thin. I need to give it more room, and the ranges are also. Look at this, man. The price interval that I have from here is 4 ticks. That's actually a lot. When you put more ticks, when you increase your price interval, you lose the detail. So I guess 2 is okay. The ranges are just huge. Nasdaq, look at these ranges here. What's the Nasdaq is doing? Oh boy, look at this high here. This high came from. I guess I should pay attention to this. Notice where this high came from. Notice where the low is coming from. It's coming from, look at this, very technical, right? Very mechanical. Value of the low, almost to the tick here. It's also overnight high, very mechanical trading here. What's happening with? No, the ES is not like that. These are 2 different markets, huh? To be honest, this is the first time I'm checking levels. No, I don't have the context for Nasdaq, for example. Oh boy, look at this inventory here. What happened this market yesterday? It was only 2 days range. Is that true? Yeah, it's only 2 days range. Huh. This is when I have more than one chart, it's just too much data. It is just slows. It makes my chart very slow. They may have something here. The market can come back to this low here. Have really low odds to stay. The market has good odds taking this low before the market close. Now, do I want to be short here? Because of the context, right? We are right at the center, the other chop, potential rotation here. No, that's not my market. Boy, these ranges are huge, and these are 2 ticks. These are 2 ticks charts, right? 2 ticks increment. Can you see here? If I use a full screen here, I go from 53 to 55. Boy, this is a crazy market. That's why I don't do this. This is thin. Now this low has been corrected. Right? It was very mechanical low here. I don't know how this market, but I see, for example, really low. How it dries, how this market dries here. Doesn't attract volume here. It's very far from this low. The ES has taken the low here. Now, where it is now? This was bull, no excess. This is weak because it's been bought from overnight high back here. I guess the Nasdaq is a more balanced market. You know, this is balance here. You have 3-day balance, overlapping value here, and today's value is inside previous day value. Alright, I wish you guys a good rest of the day. It is 10, almost 10:30. Stay safe. I wish you a good rest of the day. Stay safe. Bye bye.